the concerns and anxieties people have about this current housing market, are they justified? And also, what advice would you be able to give to potential home buyers who may be fearful of the market?
Right. And to my experience and, to everything that I've been seeing on my own, everybody's anxieties right now with this current housing market is very justified. Within the last 2 years, just in Florida, average home prices have increased over 30%, and it's getting a lot harder to qualify home buyers because not only is the pricing that they saw 2 years ago has increased now by 30%, but the interest rates have gone up exponentially. 2020, 2019, we started out with very low interest rates and it got even lower after COVID. So everybody started buying up, and now these started to drive the prices because we have no availability or no houses left to give out. And it's just causing a huge increase in prices for the average buyer. So their anxieties are very justified. I don't see right now in the next 3 to 4 years that there's going to be a crash. I know a lot of people are thinking that that's coming, but it's not. It's going to be more of a market correction, which is not going to happen in the next 3 to 4 years, where we're going to see a slight drop in prices between 10 to 15%. But again, my advice to all my clients whenever I do pre-approve someone, their anxieties are more focused on what the rate's going to be at the end of the day. And I always tell them that you're not marrying the rate, but you're marrying the home, because this is going to be your first home and you're probably forever home. But at the end of the day, you're not marrying that rate. Whatever you get today in 2023 is going to be very different in 2024. And it could be even more different in 2025, because these interest rates are going to fluctuate day by day, year by year, depending on the market goes. And if in a year, you still are at a 6% and the interest rates skyrocket to 8%, imagine you trying to buy a house at 8% instead of 6%. So I always tell them, you're marrying the home, not the rate.
Wow. Yeah, that's a really good point right there. And I never heard it like that. So I definitely want to go ahead and take that. You're marrying the rate. Oh, no, you're not marrying the rate, but you're marrying the
Marrying the
home.
home,
Yeah.
not the rate. The rate can change, but the
Yeah.
house, that is yours. It's better to have something that it's tangible and that you can touch and feel than to worry about a rate that in a year, if the interest rates drop from 6% to 4%, you're already winning. You
Yeah.
have the house, you got the equity, and now you can refi and get and just lower your interest rate, and that's it.
Yeah. Wow. Yeah, that's really good information right there. I hope you guys are taking that really, because I mean, I'm pretty sure you hear it all the time about the one thing is it's always about the interest rate, interest rate, interest rate. But yeah,
And it's a very important component. It's a lot of people see a 6.5%. They're like, oh, I really want 6%, because in their mind, psychologically, 6% looks better than 6.5. But mathematically, when you compound it over 30 years, that payment from 6.5 to 6% will probably save you $75 a month. It's just a psychological thing that I've seen over the years, that people just like to have something that looks nice compared to what they see mathematically, because they're not thinking about that. They're just thinking about, I got a 6% rate, not a 6.5.
Yeah. 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 Good points. Great points, George.